Taking on Wall Street, and we are covering it from every angle.
So how will proposed financial regulations affect the mortgage industry, if at all? Joining us now with his take, Greg Rand. He is managing partner at Better Homes and Gardens, Rand Realty. Great to see you again, Greg.
Same here.
So will these new interest rates, it's all about interest rates, of course, because prices are kind of stuck at that down point right now. Will these financial regs affect interest rates in any way?
I'm not sure if the regulations will. Them stopping buying mortgage-backed securities this month, which has begun, that has started to tick rates up a little bit. They're kind of bouncing around where they are, but we anticipate, and what's more important, the buyers out there anticipate that rates are going to be going up, and we figure probably close to 6.
Irregardless of what happens with the financial regulation stuff.
I would think so, yeah.
The home sales numbers we got today were decent, encouraging certainly. What are you seeing out there in the trenches?
Well, we're way up. We're in the suburbs of New York, and friends of mine from around the country are telling us the same thing, is that the free market's at work here, okay? People have been waiting on the sidelines, waiting to see a firm bottom of prices to know that they would get in there at the right time. So our market is up 35% right now from last year, first quarter. We're up 60% as a company because we're opportunists, and we stopped focusing on the crisis about a year and a half ago. We've been focusing on the opportunity ever since. But generally, the sense seems to be that the worst part of the recession is behind us, notwithstanding the speech today on Wall Street, where I think that could actually have a dampening effect, just because it's kind of if they could get out of the way, that would be good. If Washington could just get it through their heads that if they let the economy recover, housing market as well, get out of the way, let it happen, and better times are ahead.
But I come back to interest rates, because so much of what happens with the whole economy, but particularly real estate, depends on interest rates. If, in fact, they begin to spike, we got China has a lot of problems that we've been talking about. We got Conal McShane over there. He's been saying, there's a possibility they might not be buying as many of our bonds as possible. If the bonds aren't selling, interest rates are going to go up.
Well, that's why I hope they don't overregulate to prevent the free market from acquiring those mortgage-backed securities and letting the American market kick back up again. Because, listen, if we're under 7, we're fine. We're really fine. People who are freaking out.
Even all the way up to 7.
Yeah. People who are freaking out over the idea that something could go into the 6s. 6s are historically fantastic.
Very low. True.
Still, the affordability is still really strong. If you look at the affordability, which of course takes home prices and taxes and incomes and interest rates and balances them all to see how the affordability of housing is, we have plenty of room still, even if rates go up, to be historically
up to about 7.
Place.
So that's the ceiling.
That's my sense.
You just said that you just hope that once the Fed and Treasury get out of this business of buying up mortgage-backed securities, that you let the free market in and not, what would it be, regulate?
Not over-regulate. Yeah.
Okay, but define that. Define over-regulate.
Well, listen, from where I'm standing, it appears that we have regulation over Wall Street, okay? They weren't regulating hedge funds. They weren't regulating derivatives the right way. But the idea of a whole new layer, that just scares me, I mean, listen, I stopped listening to what politicians say a long time ago. It's more about what they do.
That's right.
So it was a beautiful speech today. They all are. That's not the point.
Yeah.
The point is that what was he doing here? Why was he looking in the eyes of people on Wall Street, the bankers? I think there was an intimidation play here. I know that, for example, the government intervention in the housing market with respect to the mortgage bailout of borrowers hasn't worked. It wasn't well thought through. It didn't connect. Even the home buyer tax credit, which was a nice little bonus, but that is not what's driving the market right now. It's purely price and confidence that's driving the market.
All right, so you have no confidence in the government, but you do have confidence in the housing market, which is good.
And Americans, I have confidence in people spending their money.
Good
nice
to see you, Greg.
See you.
Thanks a million.